Hey there, and welcome to Real Investment News. I'm Mike O'Neill. The closing bell has sounded, and the markets all dropped from yesterday's record highs, but not by much. The Dow was down about 100 points, but that's only about a half a percentage point. Same thing with the S&P. It was down just slightly, and the NASDAQ was down about half a percentage to close at 6,750. Now, the biggest drama was actually earlier today when it kind of leaked out that the Senate tax bill was going to delay corporate tax rates those cuts until 2019. As you can see, that dropped down here, but then things did recover after a House panel actually passed their bill. Just a few minutes ago, Disney released its earnings report, and it missed the estimates. Take a look at this. Earnings per share were 107 instead of the 112 that was expected, and the third quarter revenue was just $12.8 billion instead of the $13.2 that was expected. Disney reported that operating income for most of its businesses was down year to year, including the media networks, which had the biggest drop of 12%. As you can see here, after hours when that report came out, it dropped about 4%. Now it's starting to recover. It might get back up there for tomorrow, but we'll be keeping an eye for what happens tomorrow morning. And then we told you in yesterday's closing report how streaming video company Roku had beat its expectations and predicted that it could even break even next quarter. And take a look at this jump, up more than 50% from the day before. Right here, this was the report came out. Look at the jump it took just in after hours, and then climbed up an additional, I think it's up like 54%. That's amazing. And then there's Snap. Now on Tuesday, we told you how the social media company behind Snapchat had dropped after hours because of its reported revenue drop in the third quarter that fell well short of expectations, as did the number of daily active users. Well, things have gotten worse. Morgan Stanley analysts lowered their rating from equal weight to underweight and reduced the price target from $14 to $11 a share. That follows downgrades from RBC Capital Markets, UBS, and Stifel. That's it for today's report. Thank you very much for watching us. Be sure to follow us on Facebook and Twitter and subscribe to our YouTube page, and we will see you tomorrow morning.